Hey learners, welcome to the Nav Nerds. So, as you know, in General Journal, in Business Central, is used to post transactions directly to the customer accounts, vendor accounts, or GL accounts. Today, in this video, we will see what is Standard Journal and what is Deferral Journal with an example of each. So, starting with Standard Journal. So, Standard Journal is used to say frequently used general lines as a template. So you don't need to enter the same line again and again. It saves the account number, account name, amount, description, and if we want to post the monthly entry, salary allocation, depreciation entry, and all, we can use the standard general. And before to use the standard general, we have to save it first. You have to make the lines. And for the basic example, I have created the lines, and in the action save as a standard general, code can be as demo. And if you want to save the amount, you can turn that boolean true, deleting this line, and then get the standard general. And here's the demo. All the saved line is populated. The standard general saves the line, and we can use these lines frequently as a reusable template. So standard general is used to retrieve those saved templates into the general batch for posting. It reduces the manual work of again and again filling the same line. And the next topic for today's video is deferral schedules. The deferral schedule is used to distribute the revenue or expense over multiple accounting periods instead of recognizing the full amount immediately. As instead of posting the entire amount in 1 month, Business Central spread it across future periods automatically. So the setup start from the deferral template. I have created this one. You have to first define the defer code and the deferral account, and then deferral schedule, the deferral percentage. Deferral percentage defines what percentage of the general amount will be deferred. I have set it to 100%. I want to defer full amount. And then calc method. This field control how the amount is distributed across the period. And here we have four options: straight line, equal, days, and user defined. In a straight line, the amount is divided equally across periods. We can ensure the equal distribution. And then equal per period. It is similar to the straight line. The system divides equally, focus strictly on period count. And then days per period. The distribution is based on the number of days in each month. For example, January has 31 days and Feb has 28 days. The amount is distributed proportionally based on the days, as it more accurate for the contracts. And then user defined, we can manually edit the deferral schedules. And then start date, it defines when the deferral schedule begins. Posting date, beginning of the period, end of the period, beginning of the next period, beginning of the next calendar year. And the number of periods, it defines how much accounting period the amount will be spread across. As I have set this 12. And then period descriptions, it specifies the description that will be shown on the entries for the deferral posting. And in short, we can say that deferral template fields control how much amount is deferred, how it is calculated, and when to start, and over how many period it is recognized in the financial statements. Now we are done with deferral template. We can start with deferral schedule. And to proceed with it, we have to define the deferral code, which is our demo. Now in the action button, function deferral schedule. We can modify it also here, defining the calc method, number of periods, amount to defer, divides the amount in equal 12 months. And here we can post these lines. It will automatically create future entries, monthly expenses recognition based on the schedule. Instead of hitting P&L fully, it spreads gradually. So in short, we can say that deferral in general journal allows us to recognize expenses over multiple periods instead of posting the full amount immediately. It ensures accurate financial reporting. So we have seen the standard journal and the deferral. That's it for this video. Thank you for watching.